I've been asked for a long time to talk about these two stocks, Archer Aviation and Joby eVTOL stocks. There are plenty of other players in that market, by the way, but let's focus on just these two. It's a market that's expected to grow in the coming years quite quickly. Now, I just want to make sure that everybody's on the same page here. You're basically making a bet that these companies, either you're choosing Joby or Archer or maybe both of them, that they're going to be successful in the future. They're going to generate lots of revenue and lots of profits in the future, because currently that's definitely not the case. So yeah, maybe your investment is going to 10x or more, or yes, this is still a possibility. It can go to zero or at least close to it. I'm not saying it's going to happen, but those are the scenarios in this case at these stages. Now, the market that they're operating in, right, the global eVTOL aircraft market, is expected to grow quite quickly. According to market.us here, the market will grow at a CAGR of 36.8% up until 2033. The forecasted market size for 2023 is $39 billion. If we look at a slide of Archer's presentation a couple of months ago, they say here, Morgan Stanley predicts urban air mobility to be a $29 billion by 2030 and a $1 trillion plus market by 2040. So yeah, I mean, this is in the stage where you see big numbers thrown around left, right, and center. So let's start off with Joby, then Archer. Both companies reported earnings more recently, so we have some updated numbers. So stay tuned for that. If you enjoy this type of videos, hit all the buttons, like, subscribe, notification bell, do all of that. We really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So looking at Joby Aviation, it has a market cap of well around $4 billion. One share will cost you now $5.29. Year to date, the stock is down 21%. Year over year, stock is down around 10.79%. And in the last 3 months, the stock will be up around 7% with the pre-market action. Now, this is definitely not a company that, well, if you look at pricing metrics, you can make some conclusions here, right? If you look at the pricing metric right now, EV to sales in the next 12 months, 305.5 times. Does that make much sense? No, it does not. And also, if you look at what the analysts are expecting, I mean, huge growth, right? In fiscal 2024, barely any revenue. But then if you look at fiscal 2025, it's expected to grow by 14,403%. And then in fiscal 2026, growing by another 308.6%. So we're still in a stage where just looking at the traditional metrics here does not make much sense. Currently, there are 8 analysts covering this company with an average analyst price target of $7.54, representing 44-45% upside from the price we're at today. Now, I say that traditional metrics right now don't make much sense, and that's because, well, we are still really pre-revenue, the stage of, well, let's see how much they can sell, let's see how much they can manufacture, let's see what the operating expenses are once they ramp up, etc., etc. Of course, the company has told us what they expect, but we are still to reach that stage. Plus, the FAA does play a big role in this industry. And so we have some comments from the latest earnings call and earnings report. So they said the following. They see exceptional progress on certification with the publication of the FAA's SFAR, significant advancements in certification program and in manufacturing processes. They ended Q3 with $710 million in cash and short-term investments. They raised an additional $222 million in October and expect a $500 million investment from Toyota. They deepened key partnerships with Toyota, Uber, and Delta. They work closely with Dubai regulators for potential commercial service by the end of 2025. They also completed exhibition flights in Japan using the third production prototype aircraft, and they reached a major milestone on the journey to type certification. And so if we look at the latest report, we can see from revenue, well, nothing, but from flight services, $28,000 compared to $81,000 in the last 9 months. Now, what we can also see is that total operating expenses increased 22.28% and closer to 30% for the last 9 months. If we look at the basic shares outstanding here, that's up 3.34% year over year for the quarter, and diluted one is basically 0.5%. Now, what does this mean, right? What does this mean when you're losing this amount of money? And this is what you've got, right? The total cash, cash equivalents, and short-term investments. Well, you're basically burning this amount per month, which means that you have enough money to survive for the next 17.66 months without having to raise more money or, well, the cash infusion, or maybe, well, by then you're already going to generate more revenue and stuff like that. You don't have to invest as much as now, so maybe the losses will be less. But currently, if everything stays the same, this is what you get, 17.66 months. Of course, they told us they raised an additional $222 million in October, and they expect a $500 million investment from Toyota. So it's not like they don't have access to money if they really need it, but then again, you will probably get diluted. Now, with regards to dilution for these types of companies, you as the investor that is making a bet on these companies, you just have to take the risk, right? You just have to take the hit because yes, you get diluted right now, but if it does work out, then the dilution that happens today will not really matter if the stock, if your investment does 10x or more in the future. Yes, it hurts, but if it doesn't happen, this company will not survive. Looking at the charts right now, we're in an interesting area right here. This is the downtrend line, which of course we're going to wait and see if it can go above it in the next couple of weeks, maybe in the next couple of months, shall I say. That's maybe a bit more realistic. Right now, it's also making a higher low, so that's better. So we're going to see what happens in the next couple of months, next couple of weeks. And maybe we're going to see a breakout above that downtrend line. Switching to Archer Aviation, here we can see that the stock is down year to date 36%, but pre-market the stock is already up another 7.4% after being up 11.14% on Friday. Year over year, stock will still be down around 20% or so, and in the last 3 months, well, it's going to be up a little bit closer to 10%. This company has a market cap of $1.65 billion, and right now one share will cost you $4.18. And here as well, same thing, pricing metrics. Right now, EV to sales, it's cheaper than what we've seen with Joby. It's at 64.2x. And here as well, it's expected to grow quite quickly in the next 2 years, according to select analysts. Here we also have 8 analysts covering this company, and here the average analyst price target does sit much higher than Joby. It sits at 136% higher than the price we're at today. Now, of course, that doesn't mean much. That doesn't tell you that you should buy or sell the stock. With Archer, we also had an earnings report and earnings call not so long ago, so they said the following things. They made significant progress towards commercialization of the Midnight eVTOL aircraft, piloted demonstration flights and market survey trips planned for the United States, UAE, and Japan as early as next year. Manufacturing facility in Georgia is on track to open soon, aiming for 2 aircrafts per month by the end of 2025. FAA certification efforts advancing well. They're well capitalized with over $500 million in cash and a $400 million commitment from Stellantis. So you can see that one company is backed by Toyota, the other one by Stellantis, and I believe there's also another company that is backed by Hyundai. They expect operating expenses of $95 to $110 million for Q4 2024. They're targeting flat to declining core engineering and SG&A expenses for 2025, and they're expecting a higher direct material cost to be financed through customer arrangements, for example, one with Stellantis. They also established a consortium led by the Abu Dhabi Investment Office to launch commercial air taxi services in the UAE as early as Q4 2025, signed a partnership with Japan Airlines and Sumitomo Corporation joint venture, Soracle, with a planned order of up to $500 million of Midnight aircraft, bringing Archer's indicative order book to $6 billion. And so the numbers that we've got in the latest quarter are basically this. Total operating expenses, $122.1 million, net loss of $115.3 million, and cash equivalents of, like they said, $501.7 million, which means they have 4.35 quarters until they run out of cash. As you can see right here, it's not that pretty. Total operating expenses increased 164.29% year over year. Net loss increased 123.45% year over year, and weighted average shares outstanding, basic and diluted, is up 43.16%. So here again, you are getting diluted, and quite a lot. Now, their business model can be seen two ways. They say here two unique revenue streams. One, Archer Air, aerial ride sharing. So the Archer core business, they initially targeting 50% of the revenue mix. The goal is to grow that to around 70 to 80% over the long run, and they're targeting above 40% gross margins. Then the other one is Archer Direct, aircraft OEM. So they can provide meaningful upfront cash flows and revenue diversity, initially targeting 50% of revenue mix. The goal is to transform it to 20 to 30% over the long run. And here they're targeting 50% plus gross margin. So one will basically look like this, right? The Archer Air one. And the other one, they'll work with their partners, United Airlines, and maybe in the future even more. Looking at the chart for Archer, we can see that last week we got a big green candle, a nice rebound above the 20-50 moving average, and actually closing just above the 200-day one. And now with the pre-hour market, we can see that we're going to be well above that 200-day moving average. Now here it's pretty clear what has happened before. Double top around $7, then downtrend line. So the stock went down, 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 all the way towards, well, just under $3. We stayed there for a while, and then now in recent weeks, we made our way back up. So there's definitely some momentum with this stock. So overall, interesting industry, interesting companies, very, very early days. Well, to say if it's going to work out or not. Yes, they're backed by pretty big companies, pretty big institutions, etc., etc. But as you've seen, they need quite a lot of cash to survive. So dilution, yeah, okay. We know these things happen with these types of companies at these stages. Now, just purely talking about the product itself. On the one side, helicopters today exist. They make quite a lot of noise. On the flip side, do we really want to have more flying objects over our heads on a daily basis? Even if they manage to reduce the noise by quite a lot, it's supposed to be, 60, 65 decibels or something like that. Helicopters, on average, it's closer to 80. So, okay, that's already an improvement. Although most of the videos that you're going to see on YouTube, there's always music playing. You don't really hear the sound of the vehicle, which is quite annoying. And then there is the aspect of, well, having those things fly above your head over the city. There is the wind force also coming down. The weather might not always be great, so that will definitely affect these types of vehicles. So yeah, these are things that you have to consider. I'm all for innovation, right? If it passes all the testing or regulation, all of that, then who am I to say here something, right? Maybe it's a great way to get from one place to the other. If it doesn't cost that much, if you get from one place to the other in 20, 25 minutes instead of an hour, okay, I'll pay probably a premium, right? But yeah, I rather stay on the ground. I like flying in planes, so maybe that's a bit weird to say, but I don't like helicopters. I've been in one or twice. It's not really my thing. So yeah, that's just my opinion. Again, these things can work out. You can actually make quite a lot of money if it does work out, because still early on, small market cap. So, okay, interesting. We'll definitely do a follow-up in the coming weeks and months. It's just my opinion. Do share yours down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.